welcome to Tokenized. Live from Stablecoin in New York. We are, of course, the show focused on stablecoins and the institutional adoption of real-world assets that are tokenized. My name is Simon Taylor. I am your host for today, author at FinTech Brain Food and head of strategy at a little company called Sardine that you should definitely check out. And joining me today is my friend, my co-host, Cuy Sheffield, head of crypto at Visa. How are you?
Man, what a day. Shout out to Nick, the team that put this event together. It has been incredible. Like, I have to say, just the energy here and the excitement and the builders in the space, all in one place together. Like, I hope that they do this every year. And I highly recommend, if you've been listening to Tokenized, if you're just starting to get into the space, you have to come out, you have to be in person and get to meet so many incredible people who've been building in stablecoins for
the only way to know if this stuff is for real is to come see it for yourself. So again, echoing that, shout out to Nick, shout out to everybody at Stablecoin. Well done. And somebody else has got some stuff going on today as well. Dropped a very big report. Joining Cuy and I is Anthony Yim, co-founder of Artemis. How are you, sir?
Great. Thank you for having me. I'm a big fan of a Tokenized podcast, and so I listen to it every week. And yeah, I'm glad to be here.
I'm so glad you're with us. Look, I have to do the thing now where I just remind everybody before we get into the content that views and opinions of our contributors today are their own and do not necessarily reflect those of the companies they represent. Nothing we say should be taken as tax, legal, financial, or investment advice. Do your own research, please. This podcast is sponsored by our friends at BVNK. And if you've been listening to this podcast, you've probably heard us say, every business needs a stablecoin strategy. And if you're looking for the best place to start, that's BVNK. BVNK is the leading provider of stablecoin payments infrastructure, helping businesses move money faster, settle globally, and even launch their own stablecoin products, all with licensing and compliance so you can build with confidence. We're proud to partner with BVNK on Tokenized. To learn more, visit bvnk.com. With that out of the way, let's talk about this report. Anthony, you launched a report called Stablecoin Payments Report from the Ground Up. So instead of me reading out the report or any of the data or any of that sort of stuff, take me behind the scenes of like, why this report? What was your goal with it? Like, why did you feel the need to do this type of report, and how did you do it?
Yeah. The short answer actually is Cuy inspired us. I think, Cuy challenged us, a while back and like, hey, I want to know better what people are doing with stablecoins and how much volume is happening, who's using it, what are the use cases. And I heard that question from like basically everybody else in stablecoin who's participating in stablecoins, and I just got sick of having no answer. And so, I was like, well, we're a data provider. We have to answer this question. And so I just started talking to folks from like Reap, BVNK, Condo, and be like, hey, look, like if we as stablecoin players in this space are going to survive, we have to really sort of change the narrative of how crypto and stablecoins are being spoken in general media. Like, I think week after week, you just see all these articles from New York Times or Wall Street Journal being pretty like black and white about crypto and not sort of having a more nuanced view that like, hey, there's a lot of things going on beyond just speculation.
You mean journalists write headlines for clicks? No.
And then I'm trying hard to bend that curve. And so
well, it's very hard to write a stablecoin strategy, which every company needs, when you don't have data that you can found anything in. So yeah.
Exactly. And
It's interesting if you think back like 12 to 18 months and like the data journey that we've been on and that you open up, it's hard to remember sometimes. There was a time when nobody cared about stablecoins. Nobody cared. There wouldn't be a stablecoin conference. Like, stablecoins are this weird niche thing. And so the challenge was, how do you get people to care about stablecoins? How do you show that there's something there? And the first approach was, well, what about on-chain data? And it was great to work with yourselves, with Allium, with others, and to understand that every stablecoin transaction, it's public. You can look at it, you can see it. And so how do you measure that? And so we started spending a bunch of time around on-chain data, putting out dashboards, we did a report, last year. And I think then we ran into this question of, it sounds too good to be true. It sounds, it's trillions of dollars. Like, what does this on-chain data even mean? Like, I don't know who's actually making this transaction. Are these bots? Like, is this crypto trading? And so it's like on-chain data alone wasn't really enough. And then you needed like survey data. You need to like talk to customers, but then like you're just anecdotal stories. And this seems like this is kind of filling this middle gap of talking to companies that are actually driving stablecoin payments and then aggregating that volume together. So now we have like 3 layers of data in different directions. It's starting to build a more clear picture. And I think that's going to be really important for anyone coming into the space to have access and understand from all those different angles.
And I want to run through some of the myths you talked about and the findings. So for you, what was the biggest myth that was out there and your biggest finding?
I mean, I think the biggest myth is, it really depends, but I would say for folks who are not very familiar with like on-chain data and crypto, it probably is a huge surprise that everybody is transacting stablecoin payments on Tron. Like the Tron as a blockchain doesn't really get mentioned here in the US. But the fact of the matter is that I think in many ways, us Americans are kind of living in a bubble. Like we don't use Binance, but really the vast majority of the world uses Binance, and Tron, especially with Tether, like offers the best liquidity and lowest fees for transactions, and that's what people care about.
Liquidity and fees drive the reality. I think that's such an important, critical point that gets missed. Good friend Guerra Kawana from Sling Money paraphrased it to me a little while ago that the people who were selling you airtime for mobile networks in the global south now also work with you for Binance, Tether, Tron. Like, and people use different words in different markets, but that is becoming kind of a norm in the global south. And then the finding that stood out to me was this idea of B2B payments being a really big deal. So break down for me like the use cases and the flows that you've seen, and kind of what kind of some of the key data points were.
Yeah. So at the high level, what we asked so I'll explain the sort of the methodology.
The methodology.
Right?
Yeah, good call.
Basically, we approached about 31 different stablecoin players and basically asked them to share their transaction data with us under the condition that we will anonymize it and aggregate it. So their privacy is protected. What was the
what are the main use cases?
Oh, yeah.
And, yeah. And then you went into methodology together. It's good. I got you.
Yeah. So at the top line, the headline number is basically annualized run rate is over $70 billion. These are KYC, KYB transactions from BVNK, REAP, Conduit.
And then that's a small segment of the market, right? Like that's not everybody. There's not 70 billion of annualized transactions at all. That's just in the companies you spoke to.
Exactly. So this is like accounted for, I think it's like less than 1% of the total transaction volume you see on stablecoins, but we wanted to be very conservative. And
1% sample size is a meaningful sum.
Yeah, I mean, I think the cool part is that I do think that we covered like 70% of all volume from these like B2B like players and B2C players, and a lot of the 90% is still like more DeFi related stuff and so
yeah.
But we wanted like to get to the core of like, hey, for B2B payments that are KYC and KYB, like what is the actual number? And for B2B specifically, I mean the bonkers like takeaway that it's going up. It's going at like 400% year over year. It just reached 40 billion, I think, annualized run rate. And then the other use cases were B2B, B2C, and C2B. So that's kind of like, for example, Binance Pay was one of the partners. They have this product called you can check out with Binance at online or in a store. And so that would be like a consumer paying a merchant. And then peer-to-peer is more like remittance. And finally, stablecoin backed cards. So that's a lot of these is over Visa, over the Visa network, and that's also growing quite quickly at 100% I think, year over year. Yeah.
So it was interesting to see like the gap between B2B and P2P in terms of how much faster B2B was growing than P2P. I feel like most people, when they come into the space, like
They assume it's
the first use case is P2P, and that's what they expect, that consumer has a stablecoin, they're sending a stablecoin to somebody else. And so do you think it was a function of just the companies that were included in that sample? And it seemed like you had some other data to show P2P might be growing faster than what the survey showed. Or is it B2B is just solving a much bigger problem that, P2P, there are plenty of apps that, are more effective and work well without, stablecoins to solve remittances. But B2B still tends to be a really challenging space, particularly for, small and mid-market businesses to move value. So did that surprise you? Like, did you expect B2B to come out, growing as fast as it was compared to P2P?
I think that like it wasn't a surprise in that, like, I think anecdotally we've just been hearing all this activity. I mean, like, this report came out after Stripe bought Bridge, I think the P2P side, P2P is very tricky because, like, ultimately, what exactly is P2P? Like, every wallet-to-wallet transaction
looks like
it
P2P.
looks like P2P. So I do actually think there, for the P2P section, there's a bit of like sample bias probably in that, like, and in that, like, the companies that were part of this first initiative, I think, just weren't very P2P focused, right? And so there's some a bit of that. It's definitely something that we want to improve for the next iteration of this report.
The on-chain Venmo kind of Sling Money and some of the other folks out there have certainly been reporting dramatic growth in what they do, and I don't think they were part of your company sample, right? And
they actually were, but I think they're just, I mean, Sling just
they're still
launched
very
officially
early,
last summer, and so we're a little early on that side of things. Yeah.
So if I'm building my stablecoin strategy, I'm at a bank or I'm at a PSP or a payments company. You have an interesting background that people don't know. You've been there. You were building the OG Venmo. What are your takeaways and your insights looking at this data? If you were sitting in your Venmo job, like now, what would you take from this report that you could use in your day job?
Yeah, I guess for the audience who don't know, I'm one of the early engineers of Venmo. I built a lot of the backend infrastructure of Venmo. I mean, honestly, I think my biggest lesson from Venmo was that, like, the entire payment infrastructure is completely not suitable for any online transaction. It's just like we need something that's truly internet native, and I think in Patrick Collison's words, like a borderless finance sort of type application. And so I think stablecoins like solves that, and now it's up to like the builders to actually like build interesting applications on top of this infrastructure layer that is now purpose built for internet payments.
I think this is something that a lot of people can miss, and coming into the space, and when we talk to banks across the world, they haven't fully realized how much developers love stablecoins, and how much easier they are to build on. And I really just even being here today at Stablecoin, like the energy and excitement around a class of entrepreneurs that is building financial products at a speed and in markets that they weren't able to before. And so if you're a large institution, if you're only focused on one market, if you've got plenty of capital, if you've got a large team, like you could figure out how to build on top of many of these existing rails. What seems like it's new is the lowering the barrier to entry, where there are so many new companies and developers that are coming in that are building products that they had no way to build before. And so it's almost like just even the number of fintech entrepreneurs today is significantly greater than 2 years ago.
Yeah.
Because the rails how accessible they were for fintech were just much more limited than what stablecoins are. And so it's really becoming this fintech developer platform that is leading to a bunch of products being built on top of it. Many of those products are still early stage, and we'll see how they do. It's also going to be intensely competitive, but it's leading to new products being created that you couldn't build a few years ago.
Well, we saw Stripe Sessions that Ramp launched their stablecoin-linked cards in 101 markets. What's that going to do for volumes? And if you think about it from back bank's point of view, like who's your dream customer if you are a money center bank? You want to get the Ramps of the world, but you also want to get the big marketplaces. You want to get SpaceX. You want to win those growth customers and be supplying them because they're growing, but they're massive enterprises. And the buyer there is a developer. And the developer is really loving the idea of working with stablecoins.
Yeah,
So
I've actually a funny story about this from early Venmo days. So Venmo had this product called Venmo Payouts that it's basically a developer API for sending transactions, and we were still really small. And actually, there was like no KYC, no KYB. There was a payment limit, and it was one of the most popular. Like to Kai's point about like just developers love being able to just send money instantly, but it just was too. We can't support this product that's doesn't do compliance properly, and so eventually it was shut down. But like it's to Kai's point, just developers love like easy fintech solutions.
talk to me about developed versus developing markets, because there were some surprising findings in, like, everybody views this as a global south thing. Is it mostly a global south thing? What did you find?
Yeah, that's a great question. And that's also one of the most, I think, surprising findings from this report was that, so we asked all of our data partners to also send us the breakdown of what, which currency, whether it's USDT or USDC, their customers were using. And so, to no surprise for the global south, Tether is utterly dominant, 80, 90% market share. But most surprisingly, for the customers who are domiciled in the United States and Europe, their preferred currency was also Tether. And so I think that was like just utterly shocking, because obviously, like, USDC is very prominent, and Circle, Coinbase is very prominent in the United States. And so I spent the last sort of week trying to figure out what was going on, and I just had a conversation an hour ago with Darren, the founder of Reap, one of the participants, and so I asked him to say, hey, you guys are based in Hong Kong, like, is this surprising to you? He was like, Anthony, no, this is like exactly what I thought it would be, because nobody, at Reap, like their customers, nobody's asking to do payments in USDC, especially because the counterparty, even if the one part of the sender is, say, American, the counterparty is likely an emerging market.
And it's more about what the recipient wants that drives the demand for the stablecoin.
My understanding from talking to Darren is that it's also very much driven by what we talked about earlier, where it's just like deepest liquidity, easiest to on-ramp and off-ramp, and just like low fees.
It's hard to compete with network effects.
Yeah.
We've talked about this on the show a number of times. When you think about the costs of stablecoin transactions, a lot of people go straight to, okay, what about the gas fees, and how much does gas cost? Like, Tron is not the cheapest blockchain overall. There are cheaper blockchains, and so it's interesting to see that Tron has continued to become used, or the most commonly used chain in many of these markets, and it feels like it's this preference for USDT. Because USDT has a better depth of liquidity, you can be able to convert USDT to a local currency at a better rate. And so it doesn't matter if you pay more in gas fees if you're able to convert at a better rate, versus there might be a chain or a stablecoin that has much lower gas fees. You save a few pennies there, but then you lose 5% when you're actually converting it. And so it feels like that liquidity piece is one of the strongest areas of a network effect. And it'll be really interesting to see over time. And even in your data, I was looking at, I think you had the Latin America section. There were certain countries like Argentina where it was much more balanced. You had, I think the market share is like 50-50 between USDC and USDT. And then you had other countries that were almost entirely USDT. So it'll be interesting to see how other stablecoins, can find specific markets and try and build an advantage on the liquidity side. And is that going to be able to be in crypto markets? We talk a lot about banks and what role can banks play with stablecoins. Well, if you want more liquidity in FX markets moving between a stablecoin and fiat, like, it'd be nice to have some banks participating in that space. And so is that an opening where even if USDT has this dominant liquidity in crypto markets, as more financial institutions come in, are they going to use USDT and deepen it even more, or are there going to be other stablecoins that they use that will now be able to be more competitive with USDT?
Can banks coming in with regulatory clarity shift the liquidity dynamics? I think it's a very good question, because there's a note that you added into our show notes, Anthony, here about like some processors didn't support Tron at first and lost out on business. What do you think about Cuy's comments and the ability to support Tron and Tether? Is that going to be necessary, or do you think that regulatory clarity and then bringing in institutional liquidity could change that?
I do think that it's, well, so one thought is that, this is actually from the Visa report from last year too, where when the survey participants aren't particularly loyal to any of these blockchains or currencies. So I actually do think that, despite what the recent report says about like Tether dominance, like Circle very much has an ability to, like, I think if they can offer better liquidity, like there's no, they can definitely eat into the market share. I think it's definitely like the future is to be defined. Yeah.
It's all there to play for. Any other thoughts on the report, Cuy?
Yeah, I think it's fantastic work. Highly recommend reading through it. And I think every conversation around stablecoins, as a larger institution coming into it, it should be grounded in data.
Yeah.
It's very hard, whether you're an institution, whether you're a regulator, to just talk about this as an abstract concept without clear, real evidence of who's using this, what are they using it for. But you have to look at it from all angles. So, appreciate all the work that you all put in there, and it's a fantastic resource for everyone to read.
I was in a conversation with some very large banks and some Fortune 500 treasury managers a couple of a day ago, and what was interesting is how in that room the people were presenting numbers that look very different to yours, more of the headline numbers. And I do think if you are going to build a strategy, you need to get close to the facts. So I echo Cuy's point entirely. So where do people get the report?
Yeah, if you go to stablecoin.fyi, that's our landing page. You can download the report straight from that site.
Great URL. All right, from stablecoin stats to saying thank you to our sponsors, we'll take a quick break whilst we hear from the folks that make Tokenized possible. This episode, if it isn't already obvious, is sponsored by our friends at Visa, the leader in digital payments. Visa's Tokenized Asset Platform, or VTAP, uses smart contracts and cryptography to help banks bring fiat currencies on-chain, whether it's launching a stablecoin or deposit tokens or something else. VTAP allows financial institutions to issue fiat-backed tokens, improving financial efficiency and enabling programmable finance. Check out the links in this episode's description to express your interest in VTAP. This episode is brought to you by Canton Network. Ever wonder where real tokenized asset volume is going? Canton Network. The groundbreaking layer 1 public chain where traditional finance and crypto are starting to converge. Why? Because Canton is the only public network with privacy. No workarounds, no compromises. This is 24/7 markets, on-demand financing with real yield, where value moves as freely as information on the internet. This isn't just another blockchain. No, this is where the serious money is flowing to solve real market demand and risk. Visit canton.network to learn more. Thank you to our sponsors. We are back, and there was a big story this week. I don't know if you guys saw it, but apparently the Wall Street Journal is reporting that big banks are venturing into the crypto world together with a joint stablecoin. So this would be conversations in a group co-owned by JP Morgan, Bank of America, and Citigroup called Early Warning Services. They are in early stage discussions, but see an opportunity for stablecoins to speed up routine transactions, cross-border payments, and things that can take longer in the traditional payment system. Cuy, your reaction to this, first of all?
A ton of thoughts. I think we've talked about this a bit of. A lot of banks are going through this challenge where it's almost like they're experiencing this whiplash of 6-9 months ago. It was very hard to justify any investment resource allocation towards stablecoins. There were plenty of other things that you would allocate those resources to, and it was unclear if there would be regulatory clarity to enable you to participate in the space. And then now much faster than even I've expected to happen. I don't know about you. We're in a world where stablecoins are on a potential path to regulatory clarity. We don't know what exactly is going to happen, but like there's some probability that they get there, and the U.S. is potentially going to be promoting itself as the crypto capital of the world, which is the polar opposite of what the environment was 6 to 9 months ago. And so for any large institution, it's very hard to flip that quickly and be able to get up and running. It takes many months to understand a space, to develop a strategy, to get through risk committees. And so I think we've seen banks go from disinterested in stablecoins, not even kind of willing to spend the time, to let's learn about them. Like, let's understand what these are and what impact they could have. And then let's figure out what to do about them. And like, what should our strategy be? And we've always said, like, if stablecoins are going to be successful in the long term, you need banks to participate. You need stablecoins to be integrated into banks across the world, that there's a very important role for them to play. It shouldn't just be a non-bank technology forever. And I think many of the banks have wanted to participate, but they haven't really been able to.
Yeah.
And so I think now this is a question of, well, how can a bank participate? And the way I look at it, there are only a handful of options that they have. One is, do you integrate existing stablecoins? And that might be a faster path to market, be able to test and pilot and do something with an existing stablecoin. Do you create your own stablecoin? But what does that mean? Not just from a technology standpoint, but how are you going to get distribution? What are the use cases going to be? And if every bank creates their own stablecoin, is that going to be a bunch of fragmentation? And then it seems like this is a third path that's starting to emerge of, will there be consortiums? Will people align around common brands with many banks going together? I think we've seen some approaches working on this in Europe and in other markets. And so I think it is still very, very early days. I think it's going to take years for this to play out. I don't expect that there are going to be banked stablecoins live in 2025 or even potentially 2026. But I think it's a clear indication of this shift from let's learn about this and study it to let's do something. And what are the different options and how can we do something? Does it make sense to do something together? And I think it's still really unclear what direction it's going to go.
Anthony, your thoughts on this?
I think similar to Cuy, but I mean, I understand early warning system is actually the builders behind Zelle, right?
Yes.
Too. And so I mean, I think they were a formidable actually competitor to Venmo. So I remember them from the Venmo times.
I think that's the thing with early warning services is don't bet against them. Don't bet against the big banks. I think there's this view in the builder community sometimes that, oh, well, of course we're going to disrupt those slow, lazy, banks. And it's far from it, right? They just have different constraints. And Zelle is, as you say, more than Cash App, more than Venmo, the dominant P2P app. But I wonder, is to your point about B2B payments, are we missing the use case here, and what's going to be interesting for banks? Have you seen any conversation or anything on the domestic side of that? Because the note here says they're thinking about a cross-border rail. Where would you be thinking about it if you were still sitting at Venmo today? If you were sort of looking at like, let's get into stablecoins, let's try and compete. Would you be thinking about like cross-border first? Would you be thinking about domestic first?
I would say it's still like cross-border, and I mean, frankly speaking, like because there exists things like Venmo, Zelle, and Cash App, it just like that will be something that stablecoins, and it's gonna be very hard. It's gonna be hard for stablecoins to compete against that. Like technically, the Venmo payment's even cheaper than a stablecoin transaction because you're just updating an internal ledger. Yeah, you're just updating a Postgres database. A number there. And so, but I think the things that Venmo were not good at was we never were able to expand beyond the United States. Like I meet so many people still overseas where they're like, oh, I wish I have a Venmo for blah country. And that just does not exist. And then also Venmo never was able to, there was a lot of demand, but the team was just too small to go after like the small business long tail use cases. And those folks are not the Walmarts who are doing huge volumes, but they also need payments solutions and existing, I think like solutions like Toast are even probably too big for like a small yoga studio, like somebody who's like a sole proprietor. But there are millions of these small businesses out there.
I was just say something. I'm curious how you think about this, but it feels like there could almost be this bifurcation where like the domestic use cases tend to be more capital markets. They're more institutional DeFi, on-chain lending. What are the things that you can do with the properties of stablecoins that are programmable, that are doing something other than just value transfer? Yeah. If it's only value transfer, sending money from A to B, domestic payment systems work really well. And so it's kind of almost a few years away in some of the more advanced, programmability, based use cases, as well as, we're seeing the asset managers in the capital markets industry in the US, BlackRock and Fidelity and others, very active in the space. If they're more tokenized assets, then being able to have stablecoins as part of it, and then have another set of use cases being cross-border focused. I think it's still a challenge for banks in the US if your customer base is US based, particularly if you want to try and create your own stablecoin. The biggest market for many of these stablecoins is outside the United States. Yeah. So if you don't have built-in distribution in many of the countries where there's the demand for stablecoin and your customers in the US don't really need it, then is a cross-border payment alone enough, or do you need more partnerships, more distributors in those emerging markets to actually create the stablecoin effect as like a flywheel that becomes used outside of just one payment that you...
It's difficult because we're saying banks as if they're one homogenous blob of thing, but actually, there are community banks and there are even credit unions, and then there are regionals, and then there are money center banks, and there's everything in between. And I think the answer to is it a domestic thing? Is it a cross-border thing? Sort of depends on where you are in that spectrum. So if I'm a global money center bank and I have lots of multinational corporates, if I can help them get in and out of exotic currencies faster, cheaper with my liquidity, my biggest customers in the Fortune 500 be super grateful for that. But that's not going to happen overnight, because a Fortune 500 doesn't change its internal systems overnight, and a bank can't change its systems overnight. So where do you start? And that's why I come back to Starlink is a very big company by the amount of money it's doing and its amount of valuation as a part of SpaceX. The ability to support this for growth customers in that middle global transaction banking side, I think, is a really interesting thread to kind of pull on. And what everybody's missed about the Genius Act is that if you are a PPSI, a permitted payment stablecoin issuer, then all of your stablecoins are, from an accounting standpoint, treated as cash and cash equivalents. Now, what does that mean? Hands up if you've ever had to issue a prepaid card. It's very complex. The full benefit of account structures are very difficult to deal with, and prepaid cards have really struggled. The business case for prepaid cards was always really high. The fraud levels were always really high, and you ended up having a lot of breakage. You have escheatment. It's just so complex. But cash is a lot less complex to deal with, and using cash regulations. I think this is the thing that the banks haven't really started to unravel yet, which is, what are the things I've always wanted to do, like serving certain segments with more of a fee-based account structure for prepaid, for the lower income segments domestically? What are those things that I can do that this regulation allows me to do that I kind of couldn't do before? So, food for thought. All right, I'm going to move us to our last story of the day, which is a company called Worldpay. You might have heard of them. They're enabling stablecoin payouts for global businesses in a collaboration with our friends at BVNK. So this global payouts would be available to all Worldpay clients in the US and Europe, and they'll be able to pay customers, contractors, sellers, and other third parties in 146 markets instantly. So that's more than 101. And without having to hold or handle stablecoins themselves. So, Anthony, from a PSP's perspective, could you see, why this is valuable to somebody like a WorldPay, and why do you think they started with payouts?
Yeah, I think that's one of the biggest hurdles in sort of non-stablecoin payment use cases. So a vast majority of the B2B use cases that we got this data from is for this payouts use cases. And I think, again, it's just because I think for payouts, especially in a now more internet native world where, I hear stories of, hey, I'm a Brazilian company, but I hired a freelancer in the US. Like, it's not easy to
Pay them.
right? Because the person you basically rely on correspondent banking, and yeah, you have, I think correspondent banking infrastructure is very well defined and well thought out for like the major corridors, but anything else is pretty tricky. And so I think that's just like the most obvious first use cases. And I think, for example, BVNK is also partnering with like Deal.com to do their payouts. We're also a Deal customer ourselves at Artemis, and so like we have engineers in Romania. Like I don't know how we would pay them without Deal.
Wow. Yeah, that sort of pandemic-driven globalization of the workforce that happened for a generation of companies has been kind of missed, and remote.com and Deal kind of enabled that. So you said something interesting, which is a lot of the B2B payments volume is payouts. Did I hear you right when you said that? Like that you're in your data about B2B, you're including the payouts use case?
I believe so. I might need to double check in.
Yeah, no, that's absolutely
yeah.
fine. You see, that's why I like it. Intellectual honesty in data. We need that stuff.
The freelancer and contractor use case, seems to be growing quite a bit. I think we're hearing about that, more and more. That if you are a freelancer in an emerging market and you have the option of getting paid in dollars versus getting paid in local currencies, getting paid in dollars via stablecoins makes a lot of sense. One of the things I think is going to be interesting to see is, I think these type of products that are, doing stablecoin payouts historically has been like almost like a push to crypto wallet, where the end recipient would have to be in crypto. They'd have to like know what a crypto wallet is. They'd have to go and get one. And so, maybe if it's a freelance engineer, then they know what crypto is and they're in the space and they have a wallet. And so there was kind of this expectation that it was going to be limited to a specific crypto segment on the recipient side, where at the same time, I think we're seeing so much innovation around wallets and the ability to create wallets that you can spin up, you can embed into different applications. You don't have to write down seed phrases. You have account abstraction, smart contract wallets. There's no gas. And so as it becomes easier and easier to generate wallets, I think you could see these use cases where you don't have to necessarily say, I can only send a stablecoin payout to someone who's already in crypto. You could actually create these types of experiences where maybe whoever the merchant is sending the payout gives you the option to one click spin up a wallet right there within the experience, and then the stablecoin lands in that wallet. And so I think there's so much of a network effect that the more wallets that come online, the better the wallet experience becomes. You move from just this very crypto audience on the recipient side to anyone being able to receive a stablecoin payout. But then you're also we talked about this before in the show, is like you're pushing the off-ramp onto the end recipient. Where it used to be like you'd have to solve the off-ramp, you have to figure out who are the local partners in all these markets. Here you're saying, let me just give you the stablecoin, you figure out how to get it to what you need. And like it seems like people are able to figure that out.
How much do you see, when you said push to crypto wallet, immediately what came into my head was push to card. And that's kind of a major payouts use case that's become very popular in recent years. And it's just something that Venmo does. Is there a push to stablecoin-linked card model that you've seen that could be a possibility here, or is that too early to say?
I think there are a lot of ways that stablecoins can become integrated into global payout solutions, and I think ultimately, like if you're a merchant and you want to be able to pay out across the world, you don't want to just have a stablecoin solution or just have a fiat solution. I think that the end products will be stablecoins are just one additional rail. And depending upon which market you're sending the funds to, depending upon the preference of the recipient, like some will prefer a stablecoin, some will prefer fiat. So I think that the future is like, how do you integrate all these things together into one comprehensive platform? And I think we're seeing that more and more in the space of companies, Conduit here, of like combining fiat and stablecoins together that are really unique, of leveraging the best of both worlds rather than stablecoin only, as a payout solution that's limited and doesn't have the same fiat connectivity.
Any thoughts, Anthony, on kind of where that payouts model goes?
Yeah, I mean, I think it's going to be very highly localized to the geographies, but I think I think that's interesting to me that keeps coming up again, and actually now, as it did like 10 years ago when I started at Venmo, was that people dismiss how just good the card form factor is. Like Venmo tried to kill the form factor. Oh, we can just do it purely by NFC. There were all these like crazy startups that were doing like sound-based like payments. All of them Venmo now just issues a Venmo card. Because basically, this card form factor just it can be offline. It's just like so versatile.
It's durable.
Yeah, it's durable. And everybody recognizes it. And so I think like I personally am very bullish on basically like the card form factor still being like the end interface, and it could be stablecoins in the back end, or whatever is the infrastructure that's most suitable.
Well, cards are really an authentication and acceptance rail, which is kind of I think about the value proposition. I mean, guy from Visa might correct me here, but it's like what do I view Visa and MasterCard and others are selling? They're selling acceptance, and that when you see this logo, it's going to work and it's going to be frictionless. And they're selling to the merchant, we're going to get you that cash and we're going to bring it to you. And then here's a bunch of rules about what happens when things go wrong.
Yes, the network rules is very, very interesting. I think that's something that also nobody ever talks about, where I'm like, I think that's like a value add that an everyday consumer doesn't realize, where, again, with Venmo, we had to kind of reinvent, like, hey, what happens if you pay with Venmo and like there's a dispute? Like, well, it's like actually Visa, MasterCard have like established all these rules for many, many years about what exactly happens if I'm not happy with this purchase. And, the merchant has X days to like dispute it and all this stuff. Like, this is actually a really important part of, I think, the value proposition that the Visa and MasterCard network.
Yeah, what happens when something goes wrong stuff. I mean, how are you thinking about that with stablecoin-linked cards? Have you seen anything emerging as best practice? I know you guys partnered with Rain. What's kind of happening in that space?
Yeah, I think we've talked about this a ton. We see stablecoin-linked cards as a new category, and it was great to see your data and showing some of the growth from the companies that you've talked to. And I think historically, like, we've had crypto-linked cards for a long time, but crypto-linked cards were generally associated with exchanges, and you made money on an exchange and you wanted to sell and be able to off ramp. But if stablecoins end up powering this new generation of neobanks and general purpose financial products, we think that these stablecoin linked cards can be very much top of wallet, everyday spend. And whenever I think about like the consumer to merchant use case, I think ubiquity is such an important thing. Like, I don't want to have to think a lot when I want to pay for something. Like, any amount of friction that you add to commerce, you're less likely to make the sale. And so if I have to think, does this merchant accept the stablecoin? I have to look around and see, and it's called different things, and do they accept the stablecoin that I have? And this one does. I don't even want to think about it. And so I think what we're seeing is this really significant growing demand from a whole new wave of developers that are building stablecoin-based financial products that want those products to become a everyday general purpose account, that is top of wallet, and they don't want consumers to have to think and wait for hundreds of millions of merchants to figure out how to accept. They want to just be able to have you show up in the same way you don't think when you tap your card. You could do that out of these stablecoin accounts. So we think there's a huge amount of runway, and we're excited that we've got a number of amazing partners that we're working closely with just to make it as easy as possible for developers to be able to roll these stablecoin linked cards out.
Stablecoin linked cards, if you were back in the Venmo days and you were looking at it as a developer, where would you be thinking about the opportunities? And if you were thinking about kind of, where do I go next with stablecoin linked cards? Unclear question. Let me rephrase. If you are a developer looking at, like, I'm going to go build a new financial product, do you think consumer domestic? Do you think consumer B2B domestic? B2B domestic, like a ramp type of spend management? Where are you seeing the hotspot opportunities? Like, what would excite you? What would get your juices going? Or are you so into data now that you're just like, what, I'm done building financial products?
I mean, the thing that I hear the most nowadays, I mean, I was at a dinner a couple days ago with Chris from BVNK and Kirill from Conduit, and we spent 2 hours of the dinner talking about agentic payments and AI. And so I think that, I mean, again, I think, right, it's like stablecoins and smart contracts allow you to have programmatic payments, and you're not going to let an agent run around with unlimited spend power, and you're going to have like guardrails.
And I think what's interesting about stablecoins is the cryptographic guarantee of settlement and the proof of where something is in the ledger, which is kind of really, really misunderstood. It's not just the programmability, it's the cryptographic guarantee of the program executed faithfully. And so that is kind of a hard thing to do with agentic AI. There's like, sometimes it quote unquote hallucinates and all that sort of stuff. But no, it followed these rules and like, here's the evidence and here's the proof. And you can do clever things like escrow. You can make sure the money only moves in certain conditions. So I think that additional programmability layer is going to be really interesting. We got all the way here to anybody said agentic AI. I know the Visa guys have been playing with that as well. Do you want to just talk a little bit about some of the stuff that people who are maybe not as familiar with intelligent commerce, with just what is that and kind of how does it start to fit into this picture?
I think in general, if you're going to have agents be able to transact and participate in commerce, you need to have a ton of controls in place. And I think that's, where we're really focused on is, how do you have trust? How can you set, guardrails and controls around what an agent can do? And how do we partner with, the leading companies in the space to do that? I think stablecoins, could have a role to play. I think it's still very early. I think smart contracts have really interesting properties, but, there's also a ton of risk and a ton of questions. So I think that, like most things, the future is going to be, some intersection of
There's some mix of all.
There's a major role for existing payment networks to continue to evolve and upgrade and be able to support new types of commerce. And then there'll be other types of payment flows that, new platforms like stablecoins and smart contracts can uniquely facilitate. And then there'll be ways that they both interact together. And so we're just excited to participate at the early stages and figure out how.
What's the payment flow? What's the flow of funds? Is it a new one? Is it an existing one? I think that's a very fair question. All right, well, that brings us just about to time. So I want to thank everybody that was here in person. I want to thank everybody that's watched or listened so much for joining us. And I want to thank Anthony. First time on the show, but hopefully we'll have you back. Where do people find out more about you and Artemis?
My X or Twitter handle is Anthony Yim, my full name, and then Artemis is artemis.xyz.
Perfect. And Cuy, how about you?
On X at Cuy Sheffield and visa.com/crypto. And this has been an amazing day, amazing event. It's awesome to see so many incredible builders in one place, and hopefully this happens again.
We need to make it happen. We're going to make it happen. We are. If Tokenized can do anything about it, we're going to make sure that it happens again. You'll find me at SY Taylor on LinkedIn, on Twitter, or wherever you look. Please, if you have ever enjoyed the show, make sure you subscribe to it. Respond in some way on YouTube, like it. Do all of those things and tell somebody who might care about it. If you enjoy the show, that's the best way you can help us out. We really, really appreciate it. Thank you so much, and we'll be back soon.